But we picked Westgold today. It is the stock of the day, out with the production update. And despite strength in the gold price, its shares are tanking, down by close to 12% at this time, around 12 noon in Sydney here. Production was impacted by an operational pause at one of its sites, and as such, it's revised down its production guidance. Now, I picked this in part because, well, actually, this was Philip's suggestion, but I thought the commentary when I was reading through the release was interesting, calling the quarter very trying, but says that it remains focused on free cash flow, not maximizing production at all costs, saying it is unremorseful for pausing mines that can't deliver shareholder returns. So the stock of the day, Westgold Resources. Philip, Pepe, I'll start with you on this one. I mean, yes, you've got the backdrop of gold prices, but I picked that quote out because reading through this report, I mean, it's rare that you hear that type of language coming from a company.
Especially with the gold price performing the way it's doing. So theory tells you if the commodity price is above the cash cost, produce as much as you can. But of course that applies at the group level and may not apply at any particular mine site. So they've made the rational decision in pausing production that's currently not getting an economic outcome. So very rational. But in terms of the share price reaction, I mean, the gold price has been on a tear and a lot of the gold producers in particular have followed the share price up. So ex-colleague of mine used to say, the commodity company follows the commodity price up or down. I think gold hit 2,400 US an ounce overnight. Again, factoring in perhaps an interest rate cut that we haven't seen yet, but it is what it is, and therefore gold prices, the Aussie companies have followed in proportion. Interestingly, as we sit today, the reduction in the production guidance they've given to 2,200 to 2,300 ounces, it's about an 11% reduction in their previous guidance. So the share prices just went, okay, well, you've reduced it by 11%, share price down 11%, so quick reaction. There was at one stage down further. Two parts to their reduction though. One was the pausing of the mine, Paddy's Flat that you mentioned. There's another 5,000 ounces that was weather related. So what I've seen in some other stocks of mine that were impacted by weather, once people realised that they were beyond the company's control and they'll get that revenue back, share prices rebounded pretty quick. So for me, that part of the guidance, we'll wake up tomorrow, the next day, and it will have recovered that. But at the moment, it's pricing everything down. So very rational decision. Some factors beyond their control. Share prices moved. It was probably a sell on open, but at the moment, given where the gold price is and where their cash costs are still, they've quoted, 2,100 to 2,300 Aussie versus a US price at about the same. So pretty much in the money. So I'm going to call this a hold. Nobody likes a downgrade. So if you've ridden the 11% down, well, the market's efficient. It's priced in the news. I would just hold it because if the gold price keeps going the way it's going and they resume some of that production, which is what they're aiming to do, share price should start to recover from tomorrow onwards.
So, this is sort of a factor of how we label these things, but if you did not hold gold or Westgold already, if you were looking for gold exposure, could today be a buying opportunity? Or you would just be cautious because it's in this downgrade cycle?
Typically speaking, downgrades, 3-day rule, wait. So I would wait to see how quickly, the weather-related impacts, how quickly can they get that back. So the company said in their announcement they're acting quickly to recover this volume. So you'll get another data point in 3 months' time. You can look at other companies like Northern Star that perhaps haven't had these issues that you can have a closer look at. It's a Western Australian company, safe place to put some money, generally speaking. So I would not necessarily buy it on the day. It's because what will happen tonight is you'll get all the downgrades from analysts. So consensus will come down. Quant funds will probably sell off the back of declining consensus price targets and earnings over the next 3 days. And then it settles and then it backwards on this upwards trajectory. So I'll just give it 3 days.
Thanks, Philip. Henry, Westgold Resources. What do you think?
Well, you can't stop the rain, can you? Let's face it. It's not a problem that's been unique to Westgold, and probably not a problem that's been unique to the mining industry generally in the Murchison area. So you've got to bear that in mind. The one thing about resource companies and production cuts is if it's a result of some weather event, etc., the gold is still in the ground. It hasn't gone anywhere. It's just a timing issue that they're not going to get the production as they had hoped. in terms of that guidance. I guess the interesting thing is to see that it was only a couple of weeks ago that they reiterated guidance at a conference, and they talked about the cash costs there of 12.31 to 13.68 US an ounce, expected in FY24. So that has increased slightly, and of course the gold production down on the back of that inclement weather. And it does look as if they've been prudent. They've got no debt, they're unhedged, they've got a pile of cash and bullion as well, $163 million US in that. So to some extent, this is a timing issue. The market, of course, gets its knickers in a bit of a twist about this, but the gold hasn't gone anywhere. It is still in the ground. The company still, in theory, can dig that gold up and process it and get that production back up. But of course, they are taking that conservative approach. As far as the share price reaction goes, well, it's shoot first, ask questions later, and Philippe is correct in terms of a downgrade cycle that we get. But this is not it's not like a downgrade where you've had, and we'll talk about this later, I guess, with Amcor or Aurora, which we saw that trading update yesterday, which is an ongoing problem. This is a temporary issue which the company has chosen, and they may have absolutely nailed it as well. If you choose not to produce and not to sell your gold when gold is at this price and gold goes up another $100-200, you're going to make more money. So that gold is still in the ground. So I think investors have to be aware of that. It hasn't gone anywhere. It's just timing. The 12% fall today, there'll probably be a little bit more to come as research houses look at winding back their price targets. But this could be a good buying option. If it got down to, say, $2.20, which is another sort of 10% here, I think that would be a good opportunity to get some exposure through this one.
There you go. It's a hold from both of my guests for now, but all is not lost for Westgold, I think is what they're saying.